So whatever happens to the bumpy business of budget and the GDP and the purchasing managers index, or whatever you call it, or inflation, folks still hold assets and they hold portfolio, they invest in pension funds, they buy stocks, and they buy treasury bills and whatever. So portfolio investment is still a part of the entire conversation. But of course, as you may know, whatever happens on one side of the street have a knock-on effect on the other side of the street. So how much effect does it have? Tajudeen Ibrahim, the head of research at Chapel Hill, Denham, wrapping up the show on the market side of the street. So let's talk about portfolio investment. It's been a very nice year, a very decent year for the market. You folks are bullish on a number of the heavyweights. I've just read your reports you published this week. And you think, so we're down to what you call either a buy or a hold or sell decisions as we wrap up the year.
Okay, so we still like a case where investors buy. On the fixed income side, we believe investors should still position more because there is more rally that's going to happen in that space in terms of either T-bills or bonds, because we're going to see a further contraction in interest rates. So that's on the fixed income side. Even yesterday that the government was in the markets to buy, to sell 100 billion naira in bonds, we saw 20 basis points contraction in yield. So that's positive.
Oh, okay.
You know,
so the market is closing down on itself.
Closing down.
Gradually.
Gradually.
So the yield curve.
The yield curve is, shifting downwards. And we could see a further downward shift in the yield curve in 2018.
So what does that mean for equities therefore? That's going to be news, isn't it?
It's good for equities in the sense that when the yield curve moderates downwards, it means that corporates and businesses can borrow money to stimulate the growth of their businesses at a lower interest rate. So borrowing at a lower interest rate or do some kind of refinancing of your loans in your books speaks to, number one, preservation of your cash flow in terms of interest and principal, in terms of interest payment. Number two, it boosts your earnings because you now have a case where you pay lower interest rates and then you're able to publish higher or stronger earnings. So the market should be happy to buy your stock. So we believe the likes of non-bank stocks that are fundamentally sound are well positioned to benefit from a further contraction, or let me say a further downward shift in the yield curve in the market in the next couple of months.
When I see the yield curve go down, what's the good news here for subnationals and corporates who think that if rates are lower, they love it to take care of more debt? For what?
It is good news for them in the sense that when the sovereign rate goes down, it gives some incentives to subnationals as well as the corporates to come to the market and raise either short-term debt, issue short-term debt, or medium or long-term debt instruments to rake in cash flows, to support the growth of their businesses. I'll give you an instance. The last time that we had substantially low interest rates in 2015, we had the likes of Nigerian borrowers coming to the market to launch 100 billion naira commercial paper.
That was on the FMDQ-OTC.
Exactly. So they were able to run with that, and they were able to run with that as low as like 8 to 9% interest rate, commercial paper. So we are waiting for that to also materialize, and I believe corporates are on the sideline to take advantage of that kind of development.
So in a manner of speaking, it's not an entirely hopeless situation.
Not completely hopeless. It is just
I mean, in terms of what the government is doing to reduce the interest borrowing environment locally.
It is going to be beneficial to all. Beneficial to the government, beneficial to the corporate.
But it's not a quick action.
It is not a quick one, but we are seeing a gradual improvement, or let me say a sort of steady downward tick in interest rate, and it is gradually having an impact, an impact on the financials of non-bank companies.
Okay, let's leave it there for today. It's good to have you here. Try to balance this a little bit and make sure folks don't get some palpitations when they hear that this is not just hopeless, but a bit of some hope there. Thank you very much. Do enjoy the rest of the day and the rest of the week. Tajudeen Ibrahim, the head of research at Chapel Hill, Denham, one of the investment banks and securities trading firm licensed by the SEC. Let's leave it there for today, shall we? Tomorrow is Friday. Let's see what Black Friday looks like tomorrow. We'll discuss that. What are you buying for the holiday? Thank you very much, everyone, and goodbye from Lagos.